Okay, good morning, good afternoon, good evening. Tuesday, February the 6th, 2024. Hopefully, I can stay powered up and connected today. Weather has calmed down quite a bit in the mountains, and so let's see if we can remain electrified. All right, I think I do. Oh, I'm sharing my screen already. You guys should be hearing me speaking. I'm just gonna remove this. Let's bring up the calendar. All right, so real quickly, we have tip economic optimism, household debt at 9 o'clock. We have a bunch of Fed speakers, uh, of which some of them can actually move the market. So nothing right in front of us as we speak. We'll be able to trade the facts as they come out. Right. So let's look at the daily chart. Big picture, and we have this swing in front of us. We've retraced approximately 61% of that bigger move, right? That bigger move on the left right here. We are at the 61% or thereabouts. And then if we look at the current move, this move right here, and assume that this is a low, then 68% of that current move is back up here, somewhere around 830. And so anything between 8 and 830, we want to be sellers of if we get there, right? That's a big if, right? This is a downtrend. And then because this is a downtrend, we clearly have a target defined as a measured move, right? So if this is a flag or a halfway move, some people call, then this takes us to about 650, 640, right? So we're looking for a destination that is south of here, right? But because we are resting at that 61, we would expect a bounce before further downslide, right? So a bounce is what we want to take part in order to sell, right? So we want to be sellers, but from higher. Okay, so let's go take a look at an hourly chart, right? And then on an hourly, if I remove some of these details, right, we can see how the day has been forming over the last little while, right? The low was just put in, the high was put in hours ago, and we're talking many hours ago, uh, about 10 hours ago. Okay, so we understand the low is getting tested. And we're pushing away from that low, right? If we look here, the low is down here. We've been making higher highs and higher lows. We're hoping maybe that this is a higher high in the making, right? Let's go take a look at that on a 5-minute chart, right? And then on this 5-minute chart, you can start to highlight levels that were useful to us in the past, right? Stuff like this, right? And then with your mind's eye, you're just looking for levels that were useful and that may still be useful, right? Things like this right here. And nothing's fancy, nothing complicated, just using your mind's eye, connect the dots. Oops, I used the wrong kind of line here. We just want to give ourselves an idea of what the market's next move might be, right? So if it's trying to go up, is it trying to get to this level here? Right? If it's trying to go down, it will have to go through these steps in order to go down. And so these become action points to us, right? We ask ourselves, do we need to take action here? Do I want to buy this or do I want to sell this? Right? Ultimately, we want to be selling up here. Okay, so we build a ladder. The facts are unfolding in front of us. It's going up the ladder or it's going down the ladder. And then we will be trading those facts with our boxes on the 1 minute chart. Okay, so let's squish this over. Let's bring the boxes into play. Let's find boxes right here. And now, because we're assuming that 61% on the bigger time frame is near here in this vicinity down here, I'll put the box right on that swing low, and I'll start measuring, assuming this is a bottom. Right, so if this is a bottom and we broke out of that box really, really early in the box, it gave us a second box, and it gave us half of a third box right there. Right, so this is a measuring device. I'm just measuring the moves right here from that swing to that swing. It gave us one full standard deviation back and forth. And now I'm just recycling the boxes in order to measure the events. Right, so this move was bigger than average, and it has retraced back into the box. If this is a low right there, maybe the box will fulfill, right? Or maybe this is a high right there, and we're coming down to this, right? It's just a measuring device. And because I have this bias in mind, I understand I'm trying to be buying so that I can sell from higher, right? So this is a good place to buy. And then ultimately selling from higher is what my goal will be. But I need to get there first, right? So I have plan A, trying to make money on the way to plan B, where I will become a seller. And plan B is a measured move in and of itself, right? The next leg, let's go back to the higher time frame. This next leg down is what I'm hoping to participate in, right? So right here, right now, we're making higher highs and higher lows. And hopefully we will be sellers somewhere around here. Okay, so we have a destination, we have a measured move, we have numbers of boxes upon boxes upon boxes. Right, so ultimately the goal is to stack a few trades, favorable trades, high probability trades, and then be done for the day, like leaving the casino with your winnings. Right, so I'm not trying to trade multiple swings in a row or multiple moves in a row. I'm just trying to trade what's in front of me for 1 to 2 hours, and that's it. And the leaving of the casino is really important to the strategy, right? So here's our first winning trade of the day, right? So now let's assume this is a bottom and put the box on that bottom. And now let's see if we can get to the top of the box, right? So if I'm thinking we're going to the top of the box, I want to be buying support. So any kind of a red candle, any kind of a retracement, any kind of a wick on here is a buy, right? Like that right there. See that little wick that was showing up on top there? Right? I'm buying when it's cheap. Ultimately, I'm hoping that it's going to the top of the box, right? One standard move, 9 pips. Right, so red candle, if it gives me a red, oh, like so, right? I'm allowed 4 clicks per box, so I just took 3 in total. I have 1 more left for this current box. Right, so we have some catching up to do from yesterday. My inability to trade yesterday due to weather and electrification or lack thereof. It's like now I have some catching up to do. The psychology is it's like a game, right? The market is tricking us into falling for a trick, we have to back off, and yet we have to not fall for greed. Our own brain wants us to catch up for yesterday. And so we have to be careful with that. Right. So going back for those latecomers, on the daily, we're looking at this 61% retracement of the bigger move, offering us maybe some kind of support in this zone, right? Looking to our left, we have the December low that's also in this area that's offering us a little bit of support. And so because we test for support and we play off of these bounces, we're thinking bouncing is what's happening right here, right now, and we can profit from this in order to eventually be sellers when the price is advantageous, right? So we don't want to sell cheap, we want to sell expensive, right? So to us, expensive is somewhere near 50% of the swing, and 50% of that swing is in this area here. And then we have 61%, which is around the 830 area, right? So we know where we want to sell. We just have to get there. Okay, so that's the idea behind the bias. When we look at it on an intermediate scale or hourly scale, we're thinking something like this is unfolding, right? And then as such, the ladder, we're going up the ladder. And so we'll have to be adding rungs as we progress. If you remember last week, we were testing the channel, just these blue lines here. We might be coming back for a retest of the break, right? Ultimately, we know we want to sell in order to, take part of the overwhelming bias. We don't want to fight the tide. Okay, so it's this intermediate, or for the time being, it's trying to get to our destination in order to sell from up there. Okay, so let's see if we can buy here. Click number 4 or 5, sorry. And then I'm hoping to break into this upper box, right? On the calendar, we have Fed speakers and bond auctions throughout the week. So it's a light economic news week, right? There's not much on the calendar. That doesn't mean there's not excuse for volatility. Right. Selling somewhere near the 8,000 mark, 800 mark, somewhere up here would be awesome. Just to be in line with the trend, selling from the midpoint. Let's just repeat this a few times on the way up. If we can get, 20, 30, 40 trades in a couple of hours and leave the casino flat, you're better off. Right? You don't have to be here for the next move if you're making your money on the current move. Right? The problem is we don't know how far this has in mind, right? We don't know what the intents are. And so we measure things as they evolve. I'm using boxes to measure things. And I understand when things have moved 3 to 4 boxes in one particular direction, it usually calls for an adjustment, right? It calls for some kind of, action for a reaction. That's kind of what we're expecting to see in this environment. Right? Here we are about ready to close some more trades, and then we'll be able to recycle them. Let's see. There's 1, 2, 3, Right now I'm in the recycling business. So all our trades have closed and now we're approaching the next box. Let's use this old one here. Put that there and get ready for a break up. Right, so there's a red candle I want to buy. And if I can get it cheaper or somewhere closer to previous support slash resistance like this right here, that would be a good place to put a couple clicks. Right. Even now, if you think that selling is a better approach, go for it. Right. As long as your target is a average 1 minute bar, the probabilities are you'll make your money. Right. The trigger has to be at support or at resistance, not in between. Right? The closer you can get it to the actual bounce point, the better off you'll be as far as your probability is concerned, right? The probability of a bounce is extremely high if we can get the price to take an entry right there. Right, so let's get ready to trigger. And if it drops back down towards this right here, I'll take a trade. There's a red candle. I'll take a trade there. And that leaves me a couple more. One there. Ooh, look at that. Beautiful. There we go. Click number 5. That's all I can afford to put into that box. Right, so I've put the clicks that belong in this bottom box here. And if we break up, it will recycle my trades. If we break down, I'm afforded 5 more clicks. I'm running with 5 clicks today. All right, so I just want to close and recycle the same size trades, the same size position, because I'm doing it at the same time of day. I typically will end up with a similar result. And that over time becomes my potential average yield, or my pay, P-A-Y, my paycheck. And so right around here is a good place to buy. I'm just waiting to see if I can recycle the trades first. So it's a slow and steady grind, 3 pips at a time. And then in the end, you're in control, right? You're not left holding the bag. And if you are, figuratively speaking, holding on to 1 or 2 trades, you have the ability to just offload them, get rid of them, give them back. Time is more important. Right, something like that right around here. That's what we want to see, right? Test of support holding, and a move back up. All right. So now I get to recycle that trade if it pulls back, just like that. Just gonna move this aside. All right, so it looks like we're climbing up the ladder. All right, so if this is the next rung, if this is our next available target in this area here, it brings us to about 750. The next one beyond that, with using our mind's eye, is in this neighborhood up here, 765 or so. We're approaching the trend line that we broke, the blue trend line. Keeping it simple. Even if our bias is wrong, we could be trading in the midst of a pullback, which at this time of day is usually what is in line for us, what's in store for us. And so we've kind of exploited that, right? It's a bearish market and it's moving up. And so we're experiencing a bearish pullback, right? A pullback in a bearish market. And we're taking advantage of that environment, making money, right? We will be building a short position, but not from these lows. We want to be selling from expensive when it's higher. All right, so keep that in mind. Just remember the goal is to sell expensive, and right now it's too cheap. So we're still closing some more winners, and that affords us the opportunity to recycle these trades. Right there, boom, boom, boom. We are. As long as it's moving favorably, one bar at a time, it affords us a little bit of profit or manageable drawdown. And the idea is that manageable drawdown is ours to exploit, right? It's an environment that we control. I choose how much drawdown and where I spend it. Right. So as a measuring device, the box never changes. It just allows me to, reset what I think is happening right here. Oh, and maybe now we're going up across this box, right? If we are breaking down and going back into the original box, I'll see that clear as day. Right, there it is. But I've already spent the clicks that belong in this environment, and so I'm not going to take any more trades here. I have to wait to recycle some of them. There we are. Right, this right there would be a good place to buy. I'll put a trade there. I'm just bringing down the average, trying to get it to close out quicker. Perfect. That's what we want to see. Right, so it's the time that we're afforded. Right? We're exploiting time in this box right here, in this current environment, we have the ability to measure time. And then if we measure or start measuring from these lows, and then we capture the swings as they break out, you're measuring versus time. It's price versus time. And you can see how we came back into the box. It doesn't matter, if I start my box here or if I start it back here. Right? This swing right there, the current swing is not on the way to the South Pole. right? It is, however, going to support. And as a test of support, you could take a trade right here, cheap, 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 microscopic size with a 1 to 2 bar target. And if it is supportive price, it will bounce and make you money, right? So I'll take a trade right there, right, at support. And so we're assuming this right here is supportive of price, right? And our assumption is tested with a microscopic trade. In my case, that's 2 micro lots, right? And if my assumption is correct, if this is supporting of price, it will bounce. And so within a bar, maybe 2, maybe 3, I'll be making my money, right? So it's a test of an assumption. And my assumption may be flawed, may be wrong, may be totally out of whack. And then the price would fall right through. And I would test my next assumption, where I assume support might be found next, right? So it's one or the other. And I don't give up until I've been proven wrong or I've run out of money, right? Typically, if I pace myself, I'll be proven wrong before I run out of money, right? That's the key to this box. It allows me to pace myself. If I remove the boxes, I'm spending too much in all the wrong places. And so now let's watch to see if we have a bounce in this area. Right? It looks like our assumption may have been right or about to be proven right. And that's the catch, right? The average bar as we speak is 2.2 pips, as shown here. And my target is 3 pips, as set in the default settings. And so as I'm speaking to you, an average bar is less than my target. And as such, it took 3 minutes, 2 minutes, 2.5 minutes to make 3 pips. Average bars are slightly increasing, right? So it's becoming easier to make money. Right? So there's an entry, cheap, right? Recycling the exact same trade that just closed a second ago under the same prerogative, right? Exact same excuse for the trade. I'm testing support. And as far as I'm concerned, this is making higher highs and higher lows, even though we are in a downtrend. Let's try that again. If you can afford to, now would be a good place to take that trade. Right around there. Okay, we're just testing our assumption. Assuming we are near support, and support should hold price up, and as such, a bounce is expected. And then if you have the clicks and you have the ability to, or the opportunity to, sorry, you want to spend those clicks, right? That's what they're for. And so they're already allocated to this job. You need to recycle that allocation. It's like inventory, and you're just churning your inventory. Right? Ultimately, the market is trying to go down, right? The USD is getting stronger. Ultimately, the dollar index might be even near resistance, but that doesn't mean it's done, right? It might be at resistance, but that doesn't mean it's not going to push a little bit higher, right? So this is what we're keeping an eye on. This is what we're conscientious of, right? This is the opposite side to our euro. And so we have to be aware of what it's trying to do, and so that we can be in sync, right? So there's that support area, holding. Right. Average bars, 2.2 pips. Someone's asking if I use a trade copier. I try not to. I'd rather give time to each account instead of a trade copier, because if I use a trade copier and today's my worst day, then I just copied my worst day in all my accounts. However, if today is just an average day, so today's a 1/4%, then I can, do my 1/4% and then switch to a different account and then, do what I can there. And so at the end of the week, everybody, all the accounts I've had a couple hours of my time. They're managed individually. Right? That doesn't mean I have a different plans for all the account. It could be all the same plan. They're just managed for the facts that are in front of me for that 2 hours. I don't want to copy trades. Besides the technology, there's also lag and delay and broker risk and above and beyond other things. There's times when I have multiple accounts open at the same time, adjacent to each other, like right here, right now. I'm trading this in front of you, but I also have this over here that's running in the background. That's a different platform that I'm running in the background with different monies. And I'm also trading this one over here. Same kind of idea. All right. And so I'm running multiple platforms at once, all in the Euro USD, but the trades are not copied. I'm still looking for that move back up off of support. Right, this right here. We tested it once, twice, 3 times. All right, we're hoping to get paid in this area here. If we can close these trades in the next 30 minutes or so, that'd be awesome, right? That will fulfill our day's mission and set us up for ultimately the next move, right? A move back down from a higher level. And that's all we're here for. And there we are. Testing support. We should find our solution right around here. Right near the bottom of the hour. That's when we have our pullback slash UK fix is starting to set up. Right. And then we expect a move in this environment. Right. It's the time of day that set us up for what's happening here. Usually with, the schedule as it pertains to, the events, there's options expiry that take place on schedule no matter what. They may or may not move the euro, but they're happening on time. right? So these are all clues that we take into account, but they may or may not add to your success. They may complicate things. And so we have to understand the meaning behind all those things. Like when I look at the options expiry, I'm looking for straddles. I'm looking for clues that tell me somebody is trying to protect something. They're not trying to profit, they're trying to protect. And usually that means they're putting money to work, like an insurance company, like a straddle, right? Why would they take both sides of the trade? All right, so stuff like this right here, we're recycling the same positions over and over and over. That's it. We're not taking undue risk. We're recycling our inventory. Right? I don't want to click any more trades because I'm hoping to go flat sooner than later. All right, if I can trade for that 1 hour right here, right now, that'd be awesome. And be done for the day. Right? We know what to do in the next few hours. Right? The next few hours are telling us, right? Even on an hourly scale, we are expecting something like this right here, right now. It's unfolding as we speak. Right? We are climbing up the ladder slowly but surely. Ultimately, we're hoping to be sellers from these red zones up there. Right? So that's the goal for those of you that are going to stick around and keep on trading. If you're going to be trading into lunchtime New York, uh, expect the market to start slowing down right around that time. And then all your goals, your anticipated outcomes start to drag out, take a lot longer to unfold. Right. So hence I try to be done by then. I want to be totally finished. Go about your different hobbies at lunchtime. Right. So right around here, if you have the money to, we are in the new box, different box, right? Recycling trades. I'm just recycling one of the ones that we closed a minute ago. Preferably you're at break even already, or you're already in the money from the last 40 minutes of trading, and you'll be ready to go flat at any time. Yours and my day is almost over, and we've been working for 40 minutes. What a life. Let's do it. If you have the money to, take a click right here. Those of you that are, thinking about trade copiers and, maybe looking to multiply your throughput, you can go to a place like this here, FX Blue. If you go to fxblue.com and then you go up to the top under downloads, right? You can use their trade copier or their trade mirror, and both of which will allow you to copy your own work to yourself, right? So that's something to look into. if you're into that kind of stuff. But like I said earlier, if today is your worst day, you don't want that copied in all your accounts. Right. So use a trade copier. Uh, use it with a pinch of salt. You know, there's a good time for it and there's a bad time for it. So right around here, testing that previous area, previous zone, right? If we want to reset the boxes as a measuring device, you know, maybe I put the box on that swing low right there, and the market gave us one box already. And now it's coming back and going sideways. Right? Let's get ready for the break up. Right? Testing support right here, right now. I'll buy that. Boom, boom. Right. So I'm just spending the money allocated to the job. All right. Testing further support would allow me maybe another click or so. Oh, like so, right there. Right. And for all I know, it's going down further. And so going into this box here would allow me another 4 or 5 clicks, you know, allocated to this. Combined, I'll have so many trades with the average. I have no swing trades right now. Someone's asking me if I have swing trades. No, everything I have here is 3 pips, 3 pips, 3 pips. We don't want to change a good thing. System's not broken. And because uh, I'm only here for an hour, maybe two, especially today, I don't want to have any kind of swing trades. Right. So looking to our hourly chart here, look to your left. Right. We are back at resistance in this area here on our, was it hours ago? How many hours ago? Right. We're looking back about 14 hours ago. We have to get through all of this in order to see, higher highs. Right. This is what we're building, right? Slow, slightly higher high, slightly higher low. Right around here. She can take a click, take it. We're just testing the environment. Nothing says it's going higher and higher and higher. And there's also nothing that gives us, a for sure outcome. We just have a measured move. Right? We know this is a measured move based on the flagpole that we're starting from. Right? We're starting from this, so we expect a similar outcome. But as such, this is time permitting. Anything can happen. We go up before we go down, right? The target tells us down, but it doesn't tell you which one comes first. For all we know, we could be going up before we go down. And I think that's kind of what's happening. Right. So it's a measured environment. And we're just exploiting the space that we are comfortable with. Right. For you and I, that's 36 pips. And so this environment is within our control. Within that 36 pips, we're milking it for what it's worth, 3 pips at a time. what we want to see, right? Green bars off of support. It kind of reaffirms our analysis. 10-15 minutes or so. Hopefully we'll have closed our trades and we'll be able to move on with our day. Ultimately, if I can have sell orders or even use pending orders up here, anything above 800, anything up here, we want to sell it, sell it to your heart's content. Sell, right? But you have to get there first. And that, if you remember, is a Fibonacci from the current move, right? The current move from here to there. We're looking at 50 to 61. In order to get to 50, we have to get through 38. Right? That might be tough. We'll see. Right? That might be tomorrow, considering we're hoping to be done in a few minutes. So we're just here for the facts. There's an excuse to recycle your trade. We've made a slightly higher high, made a slightly higher low. This needs to hold in order for our analysis to be valid. In 10 minutes or so, 15 minutes, we'll be able to hopefully be done. Or not. You have a click to spend it here. I'm spending 2 of them right there. Right, this is still very attractive. Right, there's nothing that says the price is not going to go down here. 710 before going up. Right. Create the environment, understand where your risks are, where your limits are, your personal limits, and then play within that environment. We call it playing, but it's a way of life, right? It's not a game. If you can take a buy trade right around this zone here, right around this zone, that would be fantastic. So remember the ladder that we built on our 5-minute chart? We've gone up the ladder a couple of rungs. Now we're hanging around at this one particular rung. We seem to be unable to go forward, right? We have to wait and see. We're exchanging time for money, or in some cases, money for time, right? So this is what we're up against. Give it the time that it needs. Going back to our dollar index chart really quickly. It looks like we found that resistance, right? Our yields are showing us the same story. So it bodes well for the euro to keep going up. Not to the moon, right? The euro is going up to allow us to sell from a better price. Right? So situationally, you have to spread your risk, but you don't want to go hog wild and, go click, 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 click all in one spot, and then you have no money left. Right. So this is why we wait, we draw the lines, right? If you draw the lines on your chart like so, and you can see it, then it's easier for you to take action. Right? If you don't have the line and you're not prepared to take action, you'll be reacting like a deer in the headlights. Yeah, there we are. See, that's the kind of stuff we want. This rejection, that big wick. That's an opportunity to trade. Right? So we've recycled what, 10, 15 trades so far today. And by the time we close these 12 current trades, we'll have had a good day of work. Successful day of work. Minimal risk, managed at every step of the way. That's what we want to see right there. The calendar this week is extremely light, and a lot of the Fed speakers, voting members for that, will have the ability to move the market. So be careful. Watch volatility. Right? Just because there's nothing on the calendar doesn't mean the market doesn't have anything in store for us. The environment that we're in, no, war, fear of the unknown, high interest, all the banks will be competing to start lowering their interest rates. And I'm pretty sure it's going to be a concerted event. They're going to work in concert. They're all going to align themselves to do it all at the same time and all that kind of stuff. They all have each other's phone number. It'd be ridiculous to assume otherwise. All right, so we're not changing our approach. We just have to read between the lines. Right? Mr. Powell went on 60 Minutes to make sure all of America knew, right, what was happening with their interest rates. How often do you see, Mr. Powell on 60 Minutes? Right? If you can afford to take a buy, right? Remember, we're not fading the US, right? The US is still picking up strength. We're just positioning ourselves, right? We're taking advantage of what's happening, the facts right here. So let's wait this out. See if we can make money here in this current environment. And the current box that we're in right now, this box right here, if I put it right on that swing high right there, we still have a couple of pips left inside this current box. Beautiful. That's the kind of stuff we want to see right there. Little moves in our favor, small, in aggregate, it all adds up. Come on. I'm looking at the clock. I'm really looking forward to closing these trades and kind of being done for the day. Right? The average daily range on our daily candle is 40 pips so far. The average should be in the neighborhood of 60 some odd pips. And so we know we have work to do, right? We know this is too small, right? Just 40 pips, 39 pips, where an average should be 70. And so we're just trying to determine where will we be adding the missing pips. Right? If I look at this here, large, medium, small, and actually turning green, that seems to me like it's very close to this right here. Axiom number 3, right? Vertical distance between pivots is the purest measure of momentum, right? So slowing momentum tends to give us a clue as to what's coming next, right? So if I see this as, if I see this as large, medium, small, then is this what's coming next? Right? We're just using core patterns and, axioms to keep things simple. Right? In the end, the law of large numbers will prove us right or wrong. Right? Our sample size will be in the hundreds of thousands of trades because of our sizing. Right? Let's see what goes on next. There we are at the top of the hour. So we've been trading for about 1 hour. Everybody in the group is in the money. We've closed about 25 trades or so. We should be able to close the other 12 that are here, in the next few minutes. And that will leave us with a successful day yet again. That's what we want. Small, consistent, repeatable, achievable goals. We're not trying to beat yesterday's record. We're just trying to get to an average. And every day, the probabilities are slightly different and the opportunities are very different. And our job is to gather, our mission is to gather information that lead the way, right? So the information, the clues, we gather the clues, we put the clues together, it tells us a story, we trade that story, and then we end up leaving the casino with our winnings, right? It's the process that delivers the outcome. We're just here to execute the process. Emotionless, if possible. Right, so needless to say, we've been trading for about an hour. We're in the money. We have a plan for the future, for the next few minutes at least, the next maybe hour and a half. I'm gonna let you guys go. Right, we're gonna call it a day. I'll post a picture of how these trades end in the video. Okay, so I'll let you guys go. And I'll see you tomorrow. Same time, same link, same everything. Enjoy yourselves. Trade safely. Bye-bye.